Hello dear students, welcome to the session of Advanced Financial Accounts, and today we are going to learn about chapter 3, that is accounting for joint ventures. Okay, so very simple chapter. They might ask for you 14 marks questions and also a 6 mark question in this chapter. Okay, so before we are getting into a practical problem, let us know what do you mean by joint venture and some of the major entries we need to pass in joint venture. Okay, so joint venture basically it is a short-term business undertaken jointly by two or more persons who share the profit and losses in an agreed ratio, or if they don't given a ratio, they share the profit and losses equally. Okay, in a simple term, joint venture is like a temporary partnership. Means in a partnership firm will start the business after the firm establishes, but here before the firm establishes, before the venture, when we carry out the business, okay, so that we known as a joint venture. Okay, look at here, a joint venture may be described as a temporary partnership without the use of firm name. Such temporary partnership comes to an end on the completion of the venture. If any venture gets completed, then this temporary partnership, that is joint venture, will come to an end. So this is a simple meaning of joint venture. They might ask for 2 marks question. You got the point? It is like a temporary partnership business. And next, let us see some of the features of joint venture. Some of the most important features of joint venture are like it is a short duration special purpose partnership. Means joint venture is a short duration because will only be with the sharing, that is with the partners agreed ratios only till the venture gets established. After that we may change it. And parties in joint venture are called as co-ventures, but in partnership firm the parties we call them as a partners, but here the parties we call them as a co-venturers. Okay, so co-ventures may contribute funds or supply stock from their regular business. So co-ventures, they might contribute some of the fund, that is they may invest, or they supply some of the materials or the stock for from their regular business. Okay, example, if I'm constructing any building, okay, any apartment, so I enter into a contract. So before construction of building I am entering into a contract. This contract is known as a joint venture. Okay, so either I can contribute the fund to this construction of building, or I can supply the stock. Okay, think that I have a business of my own, like a cement business. I supply the cement to this contribution, so then we'll become a co-ventures. Got it? And next one is co-ventures share profit and loss at an agreed ratio like a partnership firm. I already said they also share the profit and losses at an agreed ratio like a partnership firm, or they might also share according to the equally. Okay, so generally profit and loss of the venture is calculated on completion of the venture. Okay, here when we complete the joint venture, when all the expenses or materials paid, then we'll get a profit and losses. Okay, so these are some of the features of joint venture. They might ask for the 2 marks question. Okay, and next, so we have a difference between joint venture and partnership. You can refer it. And next, in this chapter, there are different methods adopted for recording the joint venture transaction. There are 2 major methods we follow. One is when separate set of books are maintained, and one is when separate set of books are not maintained. For your exam, mainly they might ask for your when separate set of books are maintained. This is the main thing they might ask. Okay, so when separate set of books are maintained, we will prepare 3 major ledger accounts. One is joint venture account, and second one is co-ventures account, and third one is joint bank account. So these 3 are the major ledger accounts we prepare when separate set of books are maintained. Okay, so now let us see the major journal entries which we need to be remembered while preparing those 3 ledger accounts. Okay, so please concentrate here. The first one is when the contribution made by the co-ventures. Contribution is nothing but investment, right? So when any co-venturers, that is like a partners, if they invest or if they make contribution, then the entry will be joint bank account to co-venturers account. Remember, when the contribution made by the co-ventures, the entry will be joint bank account to co-ventures account. Co-ventures means they might be any name, so we'll mention their name. So the entry will come in joint bank account, and also in the co-ventures account. In a ledger account, we'll get a entry in joint bank account also, in co-ventures account also. Next, when the expenses paid through bank account, that is joint bank account, when we pay any expenses to joint bank account, then the entry will be joint venture account debit to joint bank account. Okay, when any expenses paid through joint bank account, the entry will be joint venture account debtor to joint bank account, because the expenses are spent on joint venture account. So joint venture is getting benefit, the venture is getting benefit. Okay, so here in the ledger entry will get the entry in joint venture account and also is when joint bank account. And third one is when the expenses paid or material supplied by the co-ventures from a private account. So I said in the features, either they can make a contribution or they can supply materials. When the co-ventures supply raw materials, then the entry will be joint venture account debtor to co-ventures account. What materials he supplied, they will be given in the problem. Okay, remember the entry. When the expenses are paid or any material supplied by the co-ventures, that is like a partners, then the entry will be joint venture account to co-ventures account. Next, when the sale proceeds or collection, when the sales happen, then the entry will be joint bank account to joint venture account. Okay, the amount gets added, the amount will be directly sent to the bank, then the entry will be joint bank account to joint venture account. When the collection received by the co-ventures, any collection received by the co-ventures, then the entry will be co-ventures account to joint venture account. Okay. Next, when the assets taken over by the co-ventures, any assets in the venture firm, if taken over by the co-ventures, then the entry will be co-ventures account debtor to joint venture account. So who are the co-ventures? The name will be given in the problem. Okay. Example, PQ are running a business. If P took any asset like a P took machinery, then P's account debtor to joint venture account. This is how the entry will come. And next one is when the liability is taken over by the co-ventures, opposite side, to joint venture account to co-ventures account. Next, after this, we'll prepare a joint venture account. We will get to know whether it's a profit or loss. If there is a profit in joint venture, then the entry will be joint venture account debtor to co-ventures account. Remember, if there is a profit, then the entry will be joint venture account to co-ventures account. Okay, when there is a loss in the joint venture, opposite, co-ventures account to joint venture account. Okay, and the last one is when we make a final settlement to the co-ventures, okay, then the entry will be co-ventures account to joint bank account. The final settlement when it is made to the co-ventures, the entry will be co-ventures account to joint bank account, that is co-ventures account debtor to joint bank account. So these are the major journal entries you need to remember while we prepare the ledger account. So if you remember these journal entries, it is very easy to post in ledger accounts. Okay, so just remember the major journal entries, practice it, so keep it in your mind. Well, it's really helpful for the preparation of ledger account. Okay, so major entries here which are listed in the 10 entries which are listed in the problem. Got it? So next let us see a simple problem. By remembering these journal entries, how can we go with that problem? Yes, now let us begin with the simple problem. Look at the problem here which I have given here. PQR entered into a joint venture of a contract and rupees 1 lakh is the contract price. Okay, this is a overall contract price, that is contract price realized, or it may be a profit or anything which they have earned through the sales. Okay, the amount which is there at the beginning. Okay, and then rupees 40,000 and rupees 20,000 and rupees 20,000 were invested by PQR. This is a contribution by the co-venturers. Okay, we don't call them as a partners in joint venture, we call them as a co-ventures. So PQ are the co-ventures, they have invested or contributed the respective amount. Okay, and the next line, they purchased raw materials for rupees 60,000. Okay, so they purchased the raw materials by paying at rupees 60,000, and P paid architect fees of rupees 1,000. Q paid sundry expenses of rupees 2,000. R paid for cement of rupees 4,000. Prepare ledger account. Okay, the simple problem which asked me 14 marks. Now I'll explain that. Okay, so I have already noted the column and I have made a column for the 3 accounts, because we will prepare the ledger account, that is joint venture accounts, co-venture capital account and joint bank account. So these are the 3 major accounts which we're going to prepare when they ask the question when separate set of books are maintained. Okay, now let us go with each entry. In the last video only I have said you have to concentrate more on the journal entry. When the journal entries is known to you, it is very easy to post to the ledger. Okay, so first, PQR entered into a joint venture of a contract rupees 1 lakh. This is the initial contract amount. It will be in joint bank account. Okay, so the entry will be for this: joint bank account debit to joint venture account credit. Okay, so remember the entry: when the contract price realized or initial contract amount, the entry will be always the joint bank account debit to joint venture account. Okay, so joint bank account debit side we will mention debit and credit side. Under debit side of a joint bank account, we will mention it as to joint venture account. What is the contract price amount? It is 1 lakh rupees. We will mention it as 1 lakh rupees. Okay, got it? Next, I have set the entry. What is the entry? Repeat the entry. When the contract price realized, the entry will be joint bank account debit side to joint venture account. Under joint venture account credit, we will mention it as by joint bank account. What is the amount? 1 lakh. Got it? How to post the entry? Okay, and let us go with the next entry. So look at, after that we have rupees 40,000, rupees 20,000 and rupees 20,000 were invested by PQR. So PQR, the co-ventures, they invested the following amount. Okay, so what is a journal entry? We have seen when they are contributing the amount. When they are contributing the amount, look at the journal entry here. When the contribution is made by the co-ventures, the journal entry will be joint bank account to co-ventures account. Okay, so joint bank account debit to co-ventures account. So under joint bank account, we will take it the opposite entry, that is to co-venturers. Okay, who are the co-ventures we have? We have P, Q and R. Okay, what is the amount they are contributing? P is contributing 40,000, Q is contributing 20,000, R is contributing 20,000. Okay, got it? So when the contribution is made, joint bank account to co-ventures account. Joint bank account debit side, we have mentioned the opposite entry. Now under co-ventures, under credit side, we will mention the amount. So debit and credit. Under co-ventures, we will mention it as by joint bank account. What is the amount? P 40,000, Q 20,000 and R 20,000 rupees. Got it? So if you remember the journal entry, it is very easy to post. Next, come for the next entry. They purchase raw materials for rupees 60,000. So when they are purchasing the raw materials, what will be the entry? When they are making any purchases, the entry will be joint venture account debit to joint bank account credit. Okay, they are making the purchases. Okay, all the co-venturers combiningly they are making a purchases to the joint venture. The venture is getting benefit now. So joint venture account debit to joint bank account. So under joint venture account, we will mention it as to joint bank account. How much the amount is? 60,000 rupees. Okay, so under joint bank account credit side, we will mention by joint venture account 60,000. Got it? Yes. Let us go with the next thing. The next, P paid architect of rupees 1,000. Okay, here a co-venture is paying a architect fees of rupees 1,000, that is P. So who is getting benefit? The venture is getting benefit. Okay, so joint venture account debit to co-venturers capital account or P account, we can call it as. Who are the co-venture? The co-venture name is P. So P is paying the architect's fees, then the joint venture account debit to P's account. Under joint venture account debit side, we will mention it as to P's account. Okay, what is the amount he is paying architect's fees? 1,000 rupees. So under co-ventures capital account, we will mention it as by joint venture account Under P we are mentioning it as 1000 rupees. He is paying 1000 rupees. Got it? Next, come for the next entry. Q paid sundry expenses of rupees 2000. Same. Here P paid architect fees. Here Q is paying sundry expenses. Then the entry will be joint venture account debit to Q's account. Okay. So under joint venture account debit side, we will mention it as to Q's account. How much is paying? He is paying rupees 2000. Okay. So here under Q account, we will mention it as 2000 rupees. Got it? Next, R paid for cement of rupees 4000. Okay, here R is paying for the cement which is cost at 4000. Same entry, here the joint venture is getting benefit and it is paid by the R. So joint venture account debit to R's account. So the opposite entry to R's account, under joint venture account we mention it as R's account. What is the amount? 4000. And under co-ventures capital account, that is under partners co-ventures capital account, we will mention by joint venture. Under R column we can mention it as a 4000. Got the point? So we have entered all the entries. Now we have prepared the joint venture. Now we will total the joint venture, which side is more. Okay, by seeing the numbers only we can say here the credit side is more. That is the credit side we have rupees 1 lakh. Okay, so on the credit side how much rupees we have? We have rupees 1 lakh. So when we minus this 1 lakh from 60,000, okay, 1,000 and 2,000 and 4,000, so the balance we will get, that is profit to profit on joint venture, rupees 33,000. Okay, so what is the entry when we share the profit? What is the entry will be there when the profit is done? Look at here, when the profit we get, when there is a profit on joint venture, the entry will be joint venture account debit to co-ventures account. Joint venture account debit, we have profit 33,000. We'll share all this 33,000 to the partners. If they have given any ratio here, no ratio, I already said in the previous video, if there is no ratio given, you can share this in a equal manner. So 33,000 into 1 divided by 3 for P, Q and R, same 33,000 into 1 divided by 3, and R also 33,000 into 1 divided by 3. So what is the amount we will get? 33,000 into 1 divided by 3, we will get 11,000 for each partner. That is each co-venturer. We call them as a co-venturer in a joint venture. So this amount will be shared in a co-ventures capital account. Why? Because when we are sharing the profit, the journal entry will be joint venture account debit to co-venturers capital account credit. So here the opposite entry will be by joint venture account. What is the profit? P 11,000, Q 11,000 and R is 11,000. Got it? How to do? Okay, next we will total it more here. So which side is more? We don't have any entry at debit side now. Okay, so we will total it. I think this side will be the more. So 40 plus 1050, 52,000 here. Okay, and for the next 20, 30, 33,000, and for R it is 20 plus 30, 34 and 35,000. Same amount we will carry here, that is 52,000, 33,000 and 35,000. So we don't have any entry here. The same amount will transfer to the joint bank account. So to joint bank account, how much it is? P 52,000, Q 33,000 and R is 35,000. Okay, so when the co-ventures is debit side, what is the co-venture capital? When we are sharing the co-ventures capital, what is the entry when we are making a final settlement? Look at here, co-venturers account debit to joint bank account. Co-ventures account debit side we have made, and a joint bank account we have to mark a credit side. Okay, so by co-venturers account, what are the co-venturers? P how much? 52,000, and Q how much? Q is 33,000 and R how much? R is 35,000. So got it? So these are the different entry. Now let us see the joint bank account total amount. Okay, so 60,000 plus 52,000 plus 33,000 plus 35,000. So total will be 1,80,000. Okay, we should get same amount in a joint bank account that is tallied. We should get 1,80,000. So count it: 1 lakh, 1,40,000, 160, 180, 1,80,000. This is how you have to do with the problem. Very simple. So remember the journal entries carefully and you can easily post it to the ledger. In exam also you can directly prepare these column or a table and start posting with the ledger. Okay, they might ask a 14 marks question like this. Okay, so please remember the journal entries properly. Okay, then read the questions properly, then you can answer and you can directly post into the ledger. Thank you.